What's up, everyone? Today I want to talk about some additions to the site, talk about the market, talk about what equities I got going on, and some insights and blah, 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 right? Well, I think since I last spoke, I took off EMR, and I took off EMR because this 130, 155 spread was there, and I had a 150 call. And so between 150 and 155, we're probably not going to get a lot. It's probably going to bounce between this level. Look at the past here. You can see it's bouncing on this 130, selling above the 155, bouncing 130, selling above 155. And so I took profit on that. You can see there I highlighted it, right? I bought the 150s. I collected the $3.20 for May's. I collected that, and I closed June 8th. There wasn't much upside in this anymore, so I just took my profit. I bought it down here, right? I bought it below this pin, and I sold credits here, collected the credits, rallied through here, and I sold it here, right? So, fine, whatever, made profit, move on. Next thing. Sell. I bought sell down here on the 8th, and the next day it rallied. That was kind of funny, but I bought it on the 8th, and I'm looking at this $30, $55 spread till January. So it's a long time. I got a long time here. Well, long time in my book. And so whatever it does, if it goes down to 25 or rallies or whatever the case may be, a lot of stuff can happen in here, but that's the spread we put on, and it has a good risk reward, right? So it's a $25 gap on $4.35, 37 cents, I think it was, 472%. So I put that trade on, right? So I went over to sell. Here's delta. Here's the spread here, 30, 55. That's what I'm trading. And it's been there a while, and it hasn't moved, so that's good. So I'll just trade around that. So SPSC hasn't done shit. It's just gone sideways. And I think one of the mistakes I made here was there's just no volume. See? There's just no volume of options trading hands. I think that's one of the downsides to SPSC. Now, if you look at like sell, I didn't make that mistake and ensured that there were option trading hands across all expirations, maybe across many different strikes. So there's a lot of like dispersion of options being traded. So that's what I like. So I'll just keep that there. NTNX. Well, NTNX doesn't have too much volume either, but I guess we got kind of lucky there, and it's still going, right? NTNX. We bought it over here somewhere. We had one down move, and it rallied really nicely. And I pulled off one credit for June. I could have held that and made money, but it was like right here, somewhere in here, right? But that's okay. Now I still have 15 outright at 50, and there is an 80 there. There's what is it, a 50, 67, 50, 80? What is it? Can't remember exactly. 57, 50, 80. That's to January. Okay, this is October. So there's a 57.50 here to 80. And if August rolls around, we want it to be good earnings. We obviously want it to rally into the earnings. And if earnings are great, this put will feel fire to the upside. This put will feel fire to the upside. And they're going to have to hedge this large call. And look at all the positive delta. So we definitely want some good news coming out of this because there's many factors here that are going to drive this. You have nice delta net. You have this put that would drive short covering, this put that would drive short covering, and this put which would drive buying the closer you get to it, right? Now that's out till the end of the year, of course, right? That's this spread. In fact, like, it's probably almost logical to close the trade and put this spread on, right? If you wanted to roll, that could be another trade because then you get two earnings, right? but I'm going to leave it where it is because I bought it down here. And another thing you can look at are the metrics. So go to historical, and what's interesting is I've always noticed that when the net delta percentage of float dips below 0 and pops up and pops up and pops up right around those long-term spreads that you find, well, here the spread was originally 40 when I first saw it, and you just get good signs when you get that flip in delta as a percentage of float on these like hard large put levels in the market. And so that's something to look out for on the historical view, is just get your net delta percentage of float and your percentage of book on there, and you could see that relationship. Okay, what else do we got? I do have a hedge of a short in SpaceX, which have been working great. It's a short-term one. It's for July. It's 140. I bought it here, and it's up 100% already. But it's just a hedge. I may just pull it off and take the win, because if I take the win, it just cancels out SPSC, and I'm already up in NTNX, and then I just put on sell, right? So I'll let this play around a little bit, but I might take profits there. It's just a hedge on the overall market with this VIX, where now I'm going into the VIX, kind of jumping around here. Remember, I always look at the gamma on the VIX here. So we have this 16.25 for July, and there's also this 18.35 for August. And I don't know if you know this, but July, August is when you usually see corrections in the market, and from January through March. And every other time between there, you usually get a compressed volatility. So after March, and then into July, and then through the end of the year, you get a rally. And so everything's lining up. And so here I put 16.25.35. And this is a bit different because this is the August. So VIX expires on Wednesdays, not Fridays. This is 8/19. 8/19. And what was it again? 18? Yeah, 18.35. 18.35. 18.35. There we go. Probably color code those. There we go. Excuse me. There we go. So I can kind of see my levels. You can see it bouncing here. You get your volatile event. And I am anticipating a rally up into here. And if that happens, I'm expecting, SpaceX will get murdered because, well, it's trading at 94 times revenue or something. Something stupid. The market's not even like allowing that in other names, especially in software. Software is all, 4x, 3x rev, right? So, but it's in the AI space. It's all fraud, whatever. Who cares? Don't care too much about it. Okay, the second thing I wanted to bring up is, trades. Well, good things take time. Good things take time. And you just have to wait for trades. You can't rush anything. So I've just been filtering daily for my bullish spreads and looking for things that come up that are interesting. And I haven't seen anything yet, which, I'm still waiting for Reddit, right? I was going to buy Reddit below this 115 back here, but it didn't get below 115. It rallied, but I didn't chase it. Just waiting and waiting. It's kind of doing this rollover pattern here. So maybe it rolls over and comes back down and then I buy it, right? So you're just waiting and waiting and waiting. And when you get an opportunity, then you put the trade on. Not forced to day trade or do something stupid. That's what tends to happen is you'll find a trade like Twillo, like look at Twillo. I know based on historical back testing I've done, that this buying on this inverted spread here, for you see that 180 large call here, this 180 large call right here. I know that typically the price bounces here. Typically, not all the time, but typically it bounces. And I'm like, well, maybe I could do like a 1 month trade here or something. And I may do that, but I don't want to force things, right? I'm just waiting for my setups, and I'm going to trade my setups. So I could probably make money in a 30-day trade here, but I'm just going to skip that, right? So I'm just scanning and scanning and scanning and going across the market and, trying to look for convexity. Convexity trades would be if like volatility is up in here at 35, maybe above 30, somewhere in there. And these would be your convexity trades where you would get some type of consolidation, sideways action consolidation, and then another move up. It typically looks like ALAB or Nebius, maybe. No, that's a little too aggressive. Maybe Nebius. Yeah, you typically get something like this. You typically get this consolidation rounding pattern when you get elevated volatility, and then you get your liftoff again for convexity. And so that's those types of trades, like you would look for something like this, right? And so when it consolidates down here, then you do liftoff again, right? But you don't chase this stuff. You're already late to the trade. But here's what I wanted to show is that I added a bunch of improvements to the site with volatility surfaces, well, curves and smiles. And I want to take a look at MU. So go to vol skew, and I have these 10 years now. And so 10 years are over 30 days, 90 days, 180, 365. So what do we have? Well, we have purple is the realized volatility, annualized. That's what the equity has done in the past. That's the actual realized volatility. And remember, options are implied volatility, which means the future. They expect volatility to be in the future. And so, as a general rule, the variance risk premium would be that if the realized volatility is less than the implied volatility, then you would make money if you're selling an option, right? And if you buy a call and realized volatility is above that, and it obviously goes in your direction, then you're going to make money, right? So here we have a 10 delta put, a 25 delta put at the money, 25 delta call. So you have your tails and then at the money. And the gray is the percentile historically. Where has this curve been? And then you have the median in white. And you can see that Micron is at the top end of everything, realized, implied, across the whole curve. And so it's fairly quote-unquote expensive. I don't like using that term, but relative to the past, it's at its 100th percentile, right? Okay, and then we'll go to anchors. Anchors basically takes all those points, all of those wings, the 10 deltas, the 25 deltas, and at the money, and just tracks it over time. And it just tells you where implied volatility has been over time. Kind of an interesting graph. Overlay. Overlay just takes the curve and goes back 14 days, 30 days, 90 days, 180 days, and tells you where the curve and what the curve looked like back then. And you can see way back here it was this, then it was this, then it was this, and now it's this. So you can see across the whole surface, it elevated, the whole surface elevated. So uncertainty on both ends of the spectrum. Okay, and that's over 90 days. You can do 180, right? 90 days. Heat map. Heat map shows you the curve. So you have your 10s, 25s, and at the money. So these are puts, these are calls. And it tells you what the curve looks like. And here you could see just the whole entire curve went up. That's just what we saw on those lines. That means implied volatility is being bid up across the entire curve. And the really, 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 really bright stuff over here means
it's sitting at like its 100th percentile. You see that? 100%. It's like the highest the implied volatility has ever been. And you want to see that, like when you're down here and you buy some calls and then you get this elevated increased vol, you're probably going to make a shitload of money. Okay, that's what you're looking for. Okay, so how do you kind of use this to your advantage? Well, I think overlay would probably be the best to start. And, well, let me give you some examples of the anchors on 30 days and go to like into something flatter here. So you can see these little bumps that are happening over the 30 days across the curve. Well, those are earnings or some news event or whatever the case may be, right? They're pricing in an event. And so you typically get these little, events like this. But the further you go out, the more it kind of smooths out because you're kind of pricing all events within the time, right? So I typically look at the 90 or 180 to get kind of a better view of things. And the overlay I like the most. So let me go back to MU and kind of show you what you're kind of looking for. Now, spotting this before a trade is a bit difficult. I'm going to add some metrics that will allow you to screen for this. But I'll give you an example. Like, could we have caught MU if we understood what we were looking at? Well, MU was like September sometime. Aha! So here's the 90 day. Well, look what's happening here. So I went back in time. Here's a typical smile, typical smile, typical smile, typical smile. And all of a sudden, you have this tail, this tail in the logs, log moneyness. So really out 10%, out all the way out to 35%, right? And that's, people are bidding up. Well, I used to have the strike price there. I'll put that back. I don't know why it's not there. But people are bidding up calls. Look at that. Massive. And you typically don't see that. You typically see a standard smile like this, where downside protection costs more than upside protection. But here, look at that lift, and you see the difference where the whole curve is lifting, but the tail is starting to lift. That's what you want to find. That's fantastic. And this was in September of last year. That's right here. So you started seeing this lift right here, right? And you're looking for that. I was watching Taleb's YouTube on probability, and it's a bit like, I typically see this where people will like try to give you some deep insight about something, but they don't tell you how to apply it or some examples. They just kind of write some stuff on the board and circle a bunch of stuff and do a bunch of smirking laughs, and you're like, okay, but like, give us an example. Like, you're just writing a bunch of formulas and like. But anyway, one of his fragility talks was very insightful to me, where he says that if you're looking for these tail events, they typically build up slowly, and then you start seeing the cracks form. And when the cracks start to form, you can't actually, put the toothpaste back into the tube, right? That kind of stuff. And this is kind of an example of that, where he was describing something like this. I'll try to draw it, where he was giving an example of he has a chart where he has an example of a glass breaking, right? And a glass breaking is a single event like this on the graph. Like, here's your x, and you have like f of x, which is the glass breaking, right? And this is where the glass breaks. But what you typically see, he said, is you see this, if you zoomed in, you see this like concave, and then you see this like, oops, oh, damn it, I can't draw. I'm on a trackpad. And then a convex right here. And so this area here and this area here are the tails of your distributions. And he says that if you can spot that buildup of that concave or that convex to the downside or upside, convex upside, concave downside, then, well, you can basically try to align yourself more to sigma and tail events, which you have to understand. Tail events are very rare, right? Depending on your distribution type and how they scale. And so when I was looking at this, is that this is your buildup in the tail. That's your convex, where everything is normal, and then you're starting to see the buildup in the demand, the convexity there, right? And so that's how you can use it. Is like when you start to see this like elevated lift in implied vol, and then the tail starts to show up like that. That's a huge sign to take on some trades. Did it show up on the 180? Yeah, a bit on the 180. I mean, it's a typical smile, and then it flattened out. And then 1 year, you probably typically don't see. Yeah, leaps, you typically don't see these things. 90 days strong. 30 days is going to be a bit more noisy, but you still see the lift in the 30-day too. See that? So that's what you can use this 10-year overlay for. And in the heat map, you'll see it there. You see how all the tails are lighting up? The put downside's not lighting up, but the tails are lighting up. That's that lift in the curve, right? And you can actually see this back in July. July a bit was kind of showing up here. That was kind of your first big signal where there's nothing, and then you started to see something. Now, I don't know if like the stock actually moved very much in July. It was here. Like you saw it coming up in here, in this area. And that's probably where you wanted to buy before September kicked in. Let's go back to July 14th. So there's nothing there. I'm going to step a day forward, step a day forward, step a day forward, step a day forward. You should be able to zoom on this chart. It's showing you all history right now, which I don't know if it's the greatest, but these are hot off the presses, right? And okay, so you can kind of see it now showing up, right, in the purples. And what does the overlay look like? Is there anything interesting? Not yet, but you can kind of see the lift a little bit, right? But it was starting to show up. Let's see. Yeah, it didn't happen. It didn't happen too long. It was a month later, basically. But you were starting to get that lift, right? Sign of a signal. But that was your big signal. It was really on, what date is this? September 11th or 10th, something like that. I didn't see anything in there when I looked, actually. Oh, yeah, there's a little bit of lift. So that's what you're trying to look for, is that lift, and then you go forward more, and then you see more lift, and you go forward more, and you see more lift, and you see this, it's getting away from its historicalness. That's what you're looking for. And I'll add some metrics there to kind of find this stuff. But so that's how you use this new tenure, these tenure charts. And you can kind of see the lift there above historical as well. And not much downside put protection, right? So use that to your advantage. It's on the vol skew. And look at all that delta. That's crazy. It was the 15th pins. I mean, I do something around here, like February or March. This the typical sweet zone, right? I mean, if you did May. Remember, these are tails, by the way. So this isn't like a spread trade. These are tails. And, I mean, for fuck's sake, like you bought a 26 delta? I mean, that's fine. I'm like, okay. I mean, it's 242 days. It's a 230. And $500. So it went from $8 to $500. That's kind of ridiculous, right? It's 6,100%. So, these are these are your edge cases, right? These are like 1 in 5,000 stocks, right? I'm not saying this happens every day. I'm not trying to say that. But I am trying to show you that you can spot these tail lifts, and if those tail lifts align with like current regime, like AI, or current regime of oil or war or whatever the case may be, then you probably have a winner on your hands, and you could probably buy those tails and hold on to them. Now, I don't know what kind of crazy shenanigans you could have done here on longer term. I don't know if there was much. Yeah, it doesn't look like there was much. Hmm. Huh. December 280s were $1.30. Did that even do anything? $20x. I mean, it did something, but that's kind of crazy. But anyway, you get the idea. I like having fun looking at these things and trying to understand it. So, vol skew. Definitely use that to your advantage, these overlays, and watch for that buildup in the tails, either to the downside or upside. And that can show you the fragility that's about to kick off, and that could give you outsized returns. And remember, when you're doing like convex and convexity trades like that, you're not trying to go all in. You're just doing small amounts of money because they're tail risk trades, right? Like 2% or something, right? If you got 25 grand and you put 5 grand in, or $500 in, well, $500 times 6,100% is 30 grand, right? Like, you just let the volatility do all the work for you, and it's easier to hold the trade as well, right? Because that's what you want to do in those types of trades, is you want to be able to hold on to the trade. So you want to be able to sit through some pullbacks, and in order to do that, if you only have $500 on the line, who cares, right? Or 2% on the line, then who cares? Maybe even 5% or something, right? Everyone can stomach that. But anyway, that's what I wanted to point out. Nothing on my radar right now that I see, and I'm just being patient, waiting, and we'll see how things develop, and use this new tool to your advantage. See if you get that lift, and hopefully it works for you. Talk to you later.